Look, let me tell you something straight, and I don't want you to blink. I don't want you to multitask. I don't want you to scroll because what I'm about to say sounds quiet, boring, almost disappointing at first. But this is exactly how real money moves. Not loud, not flashy, not emotional, but patient, calculated, and ruthless. And right now, silver is doing something that confuses most people, frustrates beginners, and exposes who actually understands the market and who is just gambling with hope, because silver looks stuck. It looks weak, it looks like nothing is happening, prices aren't exploding, headlines aren't screaming, your friends aren't bragging about profits, and that silence is exactly why smart money is still waiting. Because they don't chase noise. They wait for alignment. They wait for pressure to build. They wait for moments when everyone else gets bored and walks away, and I need you to ask yourself something uncomfortable right now. Are you here to feel excited, or are you here to build wealth? Because those two things rarely happen at the same time. And in America in 2026, with rents at $2,000 a month, groceries up 30% from what you remember, credit card balances quietly creeping past $10,000, $15,000, $20,000, student loans restarting, paychecks feeling lighter even though the numbers look bigger, you don't have the luxury of being entertained by the market. You need to understand it. You need to read between the lines, because while retail investors are asking, why isn't silver moving? Institutional money is asking a completely different question, what's missing before we move? And that difference in mindset is the gap between staying stuck and getting ahead. Think about this visual for a second. Imagine a crowded highway during rush hour. Everyone slamming the gas, honking, weaving, trying to get ahead, and then imagine a quiet side road, almost empty. No noise, no chaos, just patience. Smart money takes the side road every single time, and silver right now is that side road because on the surface, nothing dramatic is happening. But underneath, pressure is building in places most people never look. Physical supply, delivery stress, industrial demand, and macro conditions that don't scream today, but whisper tomorrow. And here's where it gets real. Most retail investors don't lose money because they're stupid. They lose money because they're impatient. Because they feel guilt when they're not doing something, because they watch social media traders flexing screenshots, because sitting still feels like falling behind, but smart money understands a brutal truth. Not acting is still a decision, and sometimes it's the most profitable one. Let me hit you with something harsh. If waiting makes you uncomfortable, that discomfort is not the market's fault. It's a psychological weakness you haven't trained yet, because every major wealth transfer in history happened during boredom, confusion, and disbelief, not during hype, not during viral trends, and definitely not when everyone agreed. Think back to 2020, 2008, even earlier cycles. The people who won weren't the ones yelling to the moon, they were the ones quietly accumulating, waiting, watching sentiment collapse. And right now, silver sentiment is exactly where smart money likes it. Lukewarm, skeptical, impatient, because when everyone loves an asset, it's already too late. And when everyone hates it, it's usually too early. But when everyone is tired of it, that's the sweet spot. That's where positioning happens. And here's the part nobody tells you. Big investors don't need silver to go up today or next week or even next month. They need conditions to line up. They need confirmation that downside risk is limited and upside pressure is asymmetric, meaning the downside is small and controlled while the upside is violent and fast. And silver historically doesn't give polite moves. It compresses, it frustrates, it exhausts, and then it explodes when positioning is wrong and supply can't respond fast enough. But explosions don't announce themselves. They arrive after silence, and silence is where we are now. Look at your own behavior for a second. How many times have you entered something emotionally, only to exit right before it worked? How many times have you said, "This is going nowhere," and walked away only to watch it move without you? That pain you feel isn't bad luck, it's lack of process. And smart money is nothing but process. Rules and patience executed without emotion. They're not waiting because they're scared, they're waiting because they're disciplined, because they understand that capital preservation comes before capital growth, especially in an economy where everything feels fragile, where layoffs come out of nowhere, where one medical bill can wipe out 6 months of savings, where retirement feels like a myth unless you plan aggressively, And this is where silver fits the bigger picture. Silver isn't a get-rich-quick asset, it's a positioning asset, a hedge, a pressure valve in a system drowning in debt. And while retail investors argue about price targets, smart money watches real stress points. Industrial demand from EVs and solar-constrained mine supply, above-ground inventories, and most importantly, behavior. Because markets move when behavior breaks, not when logic says they should, and behavior hasn't broken yet. People are still hopeful, still debating, still checking charts every day. Smart money wants capitulation, boredom, apathy, the moment when silver stops being interesting, because that's when weak hands are gone and strong hands step in. And here's a pattern interrupt for you. Ask yourself this: if silver suddenly jumped 10% tomorrow, would that actually help you long term, or would it just trigger FOMO and bad decisions? Because most people don't actually want slow, sustainable wealth. They want emotional relief, they want to feel smart, they want validation, and markets punish that need ruthlessly, especially now when the margin for error is thin, when inflation eats cash silently, when savings accounts feel safe but lose purchasing power every year, and silver sitting still feels useless until you understand what it's really doing. It's testing patience, it's filtering participants, it's setting traps for emotional money and rewarding those who can wait without reassurance. And I want you to picture this scenario: a family in Ohio, 2 incomes, decent jobs, doing everything right, still living paycheck to paycheck, maybe a small 401k, some debt, watching prices rise faster than raises. Now imagine them reacting emotionally to markets, buying tops, selling bottoms, always late, always stressed. Now imagine a different version of that family. Not richer, not smarter, just calmer, more deliberate. Understanding cycles, allocating slowly, waiting for alignment instead of excitement. 10 years later, those two paths don't end in the same place, and silver is one of those quiet fork-in-the-road moments, because smart money isn't asking when moon, they're asking what breaks first: the dollar, confidence, supply chains, or patience. And historically, patience breaks first for retail, and that's when moves happen. So if you're frustrated right now, good, that means you're early. If you're bored, even better. If you're doubting why you're paying attention to silver at all, you're exactly where smart money wants the crowd to be. And here's the uncomfortable truth you need to sit with. Wealth isn't built by reacting. It's built by positioning before reactions are forced, and silver hasn't forced anything yet. And that's why smart money is still waiting, not sleeping, not ignoring it, waiting, watching, measuring. Because when it moves, it won't ask for permission. And the people who stayed will wonder why they ever doubted. And the people who left will say, "I knew it," even though they did nothing. And this is where I leave you hanging on purpose. Because the real question isn't whether silver will move, it's what specific signal smart money is waiting for before they commit. And in the next part, I'm going to break down the exact pressure point that changes everything. The moment waiting turns into action, and why by the time headlines catch up, the opportunity is already gone.